Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live. 888-994-4995, Studio A.
Hey everyone, welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. So every week we talk about something that can help you make money or save money in some way, shape, or form when it comes to real estate. Today we're here with one of our wonderful sponsors, Max Fish, and we are going to talk about condos and what happens when you go over 2 stories. A lot of people don't realize that buying a condo is not easy, and there's a lot involved in it. And ever since Surfside, we're seeing a lot of changes. Tell us what's going on in the condo industry, and how can you help us realtors make this an easy transition and not make a mistake getting a buyer into a contract with inspections and appraisals wasting over $1,000, which happens all the time.
Yeah.
So tell us, how can you help us?
Yeah, so I mean, there's a lot of different ways that I can help, with condo, because really the issue with condos lies in the financing, right? What we want to do up front when we're looking at condos, or when we have a buyer that's looking at condos, is we want to make sure that up front, or as quick as possible, we're collecting the budget, the annual budget for the association, and we're collecting as much information as we know about insurance. Maybe we can ask them for a certificate of insurance, especially now because, as everybody knows, insurance has gone up so much. What their insurance was in 2022 might have, gone up 50% in 2023.
But I found that insurance on a condo is a little less of a trick, in the sense that I found that some of these condos have Federal Pacific panels, right?
Yep.
And we're still able to get them insurance. So that's
Sure.
a myth when people say, the realtors say to me, oh, it's got Federal Pacific, we can't get insurance. When in fact, we can get insurance. It's not been a problem. In fact, which we definitely need an insurance agent on this show, because if you have something like a Federal Pacific panel, it's actually in your benefit. And I'll tell you why.
Tell me.
Okay, you ready?
I'm ready.
All right, so the reason why it's in your benefit is because the panel, right? If you can get another insurance company other than Citizens, they're going to make you go use that other company, and Citizens isn't going to insure us anymore.
Sure.
So if you have like a perfect inspection, you can't go to Citizens, you're going to have to go to another carrier.
Yeah.
I think it doesn't, it can't be more than 20% more, I believe. Again, I'm not the expert on this, but I know the basics.
Yeah.
So with that being said, that's just something to
Sure, I think it's...
keep in mind that, and by the way, if you have Federal Pacific in a building, a condo building, that means probably most of your neighbors have not changed it. So if they catch on fire, you're going down anyway, right? I mean, let's be real.
Yeah, I think, that's a good point. There's 2 aspects to insurance with condos. There's the master insurance policy that the condo building and association has for the exterior of the building.
Right.
And then there's something called an HO6, which is contents only.
In case you burn your own kitchen down.
Yeah, so you're just getting insurance for the inside. So when I say insurance, I mean the master insurance. We want to make sure that, there's sufficient coverage, that their deductibles are in line, are they 5%, are they 10%? So on and so forth. One of the biggest issues that I'm seeing with condos now is that there are a lot of lenders that might not be super fluent on what is needed for condo financing. And what's happening is, when a lender does their review of a condo, and they might not know their guidelines, or they're looking at certain things differently, or whatever the case may be, or they have their own overlays, they might report to Fannie Mae, for example, like conventional loan, the entity that governs conventional loans, they might report to them that condo is ineligible.
Okay.
And then it gets put on an ineligible list.
Which I've seen that, and funny thing, so had a company that closed a deal, so in the year, like I looked up to see like what had happened in that year, and there was one that said closed conventional, right?
Yeah.
So when I had a deal and they said, oh, it's on the do not lend list, funnier story is that the lender that was trying to do the deal on the one that I was trying to sell, he's like, we actually did do a mortgage on this, and it slipped through our underwriters, and they did the deal on this.
Yeah.
So we had known we had already closed the deal on this, why we didn't think it was an issue, and that was the one closed sale, and everything else was cash. And of course the president's like, oh, no, we can do financing in here. And a lot of these, this is 55 plus. And she's like, she had no clue that you couldn't do that. In the end, you know, I'm the one that didn't.
Yeah, the answer to that would be twofold. There's two things that are interesting about that situation. One, the problem that lies here is that if there's a lending company that doesn't necessarily know what they're doing with it,
right,
or that they're seeing things a different way than they should be seen, they can in essence mess it up for a lot of people putting it, you know.
Because it gets on the do not lend.
Correct.
Yeah, because like, for instance, Ramblewood East was on the do not lend list, then it came off the do not lend list.
Yep, so that's the first thing that's interesting about that.
How does that happen? Like, how do you get on, how do you get off?
So me and my company, we've done that before. Like I can see the reason why it's on the do not lend list, like the ineligible list. And if
give us a couple of reasons why it would be on an ineligible list.
So I'll give you an example. It's on the ineligible list because there's a 10% deductible on the insurance, and Fannie Mae only allows you to go to 5. Right?
Oh, okay.
But
that's a new one.
But there are loopholes, which I was able to find, and I actually got it removed off of the ineligible list.
Okay.
And so if it's 10% on wind only, then Fannie Mae will take it. But the prior lender didn't know that, denied.
Okay.
And then they reported it to Fannie Mae. Right? That's the first thing that's interesting about that. The second thing that's interesting about what you were saying, which was there's things that it's on the ineligible list and you know you can take it off or whatever the case may be, is simply that every lender looks at condo guidelines differently.
Okay.
Right? So for example, me in my office, if somebody is putting a certain down payment down, let's say it's 25% on a primary residence for a condo.
Okay.
Okay. Then you can do what's called a limited review.
Right, so that won't matter.
Well,
but it will matter if it's still on the do not lend list.
Correct. Well, the issue lies that some lenders still require you to fill out a full condo questionnaire when you get a limited review. We don't.
Why is that?
It just varies lender by lender. So, for example, you know, we want to know.
That's why we can't say the B word, but that they don't lend on anything.
Yeah, exactly. And we ask 3 questions. If somebody's putting down 25% on a condo, primary residence. Is the association in litigation?
Okay.
Do they have any deferred maintenance? Which means any structural thing that's going on with the property that compromises the structural integrity of the
So what happens if they're in the middle of like concrete restoration?
Well, it really depends on the nature of the concrete restoration, right? Like you're opening Pandora's box. The second that the bank knows that there's concrete restoration, why is there concrete restoration? Is this regular maintenance, or was this because there was an incident?
What if there wasn't an incident, right?
Yeah.
And what if it was because it's just time to do concrete restoration, because there's always going to be like hairline cracks, right? And it's time to paint the building.
Yeah.
So let's say you're like, okay, let's update the balconies to be more modern.
Yeah, that's cosmetic. But
you're doing concrete restoration to make sure that it's stable.
And that's my point. That's my point behind.
So you could pass your 40 year.
Correct.
And if this is like within 2 or 3 years after the 40 year and it's just concrete restoration, you'd already passed. So now this is just updating and making it pretty.
Yeah, exactly. If
Beautification.
it's cosmetic, you know, but if there's a situation where it's like it's concrete restoration because, you know, somebody's ceiling started to crack and now there's like things falling from, you know, it's all open for interpretation. Some lenders might say, nope, concrete restoration, we're not taking it. Some might say, we need to document like what exactly this is, what's the reason behind it. Is because you want something to look prettier, or is it because, you know, there's a structural issue with the building? The name of the game really is if there's anything structural wrong with the building that's impacting the structural integrity of the building, it could be a lending problem.
All right, so we've got still a whole bunch more still to talk about to find out how we get around this lending. So what we'll do is we'll take a commercial break.
Sounds good.
So we're going to see Max's amazing commercial, and then after that we're going to see one of our new sponsors, which is JK Closing. So stay tuned, we'll be right back.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fish, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fish is committed to providing his customers with mortgage services that exceed their expectations, ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fish today at 954-729-6933 or max.fisch@nwmcorp.net.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FRIPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at lauraess.com. And now back to the show.
Hey everyone, and welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. So today we're sitting here talking with Max Fish, one of our amazing lenders. He's also a direct lender, which is, a mortgage broker. So he's actually got a lot of access to programs that direct lenders don't have, and able to shop around better rates. So, but today we're talking about something that's been so crazy, and that is condo financing, which, you know, now that if you're over 2 stories, it's becoming a bear. So tell us, what are the new guidelines on buildings that are over 2 stories?
Yeah, so, you know, and really all of these guidelines came around, as you said, after Surfside, right? And they're put in place, and I'm prefacing everything I'm about to say by this, because it's a lot of documentation and a lot of things that, you know, a lot of people think are seemingly unnecessary, but they're really put in place to make sure that these buildings are keeping up to date, that they are safe for buyers, you know, and potential sellers within the building. The main things that are needed and the main change that happened after Surfside that's now needed is the deferred maintenance question, right? That question didn't exist before. So now lenders all want to know, what kind of work are you guys putting off, or are you currently doing? Deferred maintenance is pretty much defined as anything that, you know, is compromising the structural integrity or habitability of the building.
But if it's still being habitated, right?
Yeah.
So like, I mean, can you be like a little more specific so we could understand?
So there's different types of deferred maintenance. Like, I'll give you examples of things that aren't an issue. Hey, we need to paint the inside of the lobby. That's technically considered deferred maintenance. We need to redo the floors. We need to fix the parking lot because some tree branches are raising spots in the parking lot.
But that's okay stuff.
Yeah, that's okay stuff.
Because it's maintenance, really.
Correct. Not okay stuff with deferred maintenance is like
cracking in the concrete.
Cracking in the concrete, like there's issues there, plumbing issues and repiping throughout the building. You know, a lot of times I see electrical problems.
What about roofs?
Roofs, it really depends.
Okay.
It again, talking about Pandora's box. If they say that, hey, we're planning on redoing the roof, well, are you redoing the roof because there was damage done to it, or just because it was time to redo the roof? 2 different things.
Right, okay.
Right? So if the roof is currently leaking or currently has damage, that's a problem.
But if it was already on your budget and
Correct.
It says like
if it
in
was
10
just
years,
regular upkeep and it's the roof.
and you would see that because you'd be watching the budget from like year 1, year
Correct.
2, year 3, year 4, and it would always put it would be a prospectus of when that needed to happen, right?
Exactly. So deferred maintenance, you know, with those types of things, it can be a problem, but it can't, you know, it also doesn't have to be. Just because there's deferred maintenance, it just comes down to what is actually going on here.
Okay.
Is really the question, and just digging deep into that. And then the other 2 things, litigation and special assessments, the banks really just want to know, do either of those 2 things have to do with something that was structural? Was somebody walking and a coconut fell on their head and now they're suing the association?
So I just had an appraiser ask me, is there any assessments? And it was like $247. Like, that's nothing.
Yeah, no.
That's like nothing.
And so some of these assessments are, you know, we're assessing people because we want to cosmetically change and make things look better. Okay,
so what's the
fine.
budget going to need to be now, though? Like, that's my big question. Like, because before we needed them to be 10% reserves, right?
Yeah, well, that's where we need them to be for somebody to take advantage of a low down payment.
Right.
You know, if they have less than 10% allocated towards reserves. So that's important to note. Right? Because it's not about whether they have 10% in their reserve.
My favorite answer from people is, oh, no, we're good. I'm
Yeah.
like, no, I need to know, like, when you say you're good, like, they think it's good, but it needs to be 10% of the operating budget.
Correct. So if there's $100,000 of income coming in for a year, right, with $100,000 of expenses, it should balance out,
Okay.
right? Having 10,000, which would be 10%, having 10,000 set aside in your reserve account is not having 10% of reserves allocated.
Okay.
The allocated is that out of that 100,000 that's being brought in that year, you're taking 10 of that and putting it into reserves.
Now,
So two separate things.
okay, so you have to see that year you put 10%.
Correct. It's like a savings account.
Doesn't matter within your savings account.
Correct. We could all have
$1 million.
Exactly. But we need to know that in this next year, we're going to put X amount into our savings.
Okay.
That's the difference.
Now, so something that could supersede the 10%, which nobody will spend the money to do, would be a reserve study, right?
Yeah. Yeah.
So if you have that million where they're like, the presidents all the time, I love it. We're good. We're good. Like,
Yeah.
okay, no, needs to be 10%. Now you can back out. So let's say they're collecting $100,000 and you're saying 10,000 needs to be put in that year. You could back out of that 100,000 spent. You could take out 12 months of, like, let's say they're paying the water.
Yeah. So anything that is typically taken care of by like the consumer.
Okay.
Yeah. So like you can back out of that calculation.
Cable.
Yeah. Which again
Helps.
is important that we receive the budget up front and that we receive, if it's possible, a copy of the master insurance
An
policy.
agent shouldn't be listing a property without the budget.
Sure.
In fact, going on a listing appointment, to me, without knowing the budget, it tells you so much. A great budget makes your property worth so much more.
It's unbelievable.
Takes this small pool of buyers and brings it into a huge pool of buyers.
It's unbelievable. You know, unfortunately, it's one of those things that I just don't think enough agents are grasping. So to answer your initial question.
At this point in time, I don't know how.
I know. Well, to answer your initial question, how I can help agents right up front, please
Review
get me
it
the
for
budget.
them. Yeah,
Please get me the budget and get me the name of the association so I can look it up on Fannie Mae's list. Is it ineligible or is it not? Right? Because there could be, the budget could look great, but it might be on their ineligible list because of, you know.
I found something very stupid.
Sure.
So in the condo docs, it said that if the seller didn't pay their maintenance, the bank, if they foreclosed, still had to pay their monies prior to the foreclose. Like they would supersede the bank loan, which in fact put it on the non-eligible list.
Wow.
However, what you could do, but let's talk about the pros and cons to this, is you could do what's called a portfolio loan, right? If something is on the do not lend list, so tell us, like, what would that look like for a buyer?
Yeah, so a portfolio loan, and it's really called non-warrantable condos. Like condos that follow Fannie Mae guidelines are called warrantable condos.
Okay.
Non-warrantable would be, there's something about it, there's some characteristic that doesn't follow those guidelines.
Like not having flood insurance, or do you still have to have flood?
Well, you would still need to have sufficient insurance, but there might be a case where there's not
You can get your own
Yeah,
flood.
you can get your own. So that's what I was about to say. So
Because that's a whole nother thing. Oh my gosh.
I know. When it comes to
what pitfalls? We call this condo pitfalls.
I know, and when it's horrible. When it comes to non-warrantable condos, the portfolio loan that you're referring to pretty much means that the bank is going to do a loan and they're not going to sell it to Fannie Mae and Freddie Mac. I don't mean they're not going to sell it to another bank, but they're not going to sell it to Fannie Mae and Freddie Mac.
So basically it
as a
won't be
conventional
backed
loan.
by the government.
Correct. Now, with portfolio loans comes higher interest rates, maybe a higher down payment requirement, because that bank is keeping that loan. So it's going to stay on their books, which, by the way, for everybody out there, banks don't like to keep loans on their books so that they can maintain liquidity to be able to lend. That was the problem. That was one of the problems in 2008, which was banks couldn't sell the loans that they were doing and they ran out of money.
Yeah. We could sit here for hours doing condo pitfalls,
yeah.
but to recap real quick, because we really didn't hit everything by any
No,
means,
there's
people.
a ton.
Like,
There's
you
too
want
much.
to, if you have a condo to sell, like, you really need to be getting with
Yeah.
a realtor that does this research up front, gets the budget reviewed, make sure that the budget's good. You know, these are really, really important things to look into.
Yep.
And Max and I can definitely help you with that. If they don't have the reserves, right, and you're going non-warrantable, and there's more than 50% renters. How does that look?
Well, that's another,
Another non-warrantable thing.
Well, here's the thing. If
it's not for owner-occupied, let's say it's an investment property, because now that changes too.
Well, so if you're trying to put a low down payment down, which is why you would care about the reserves,
Yeah.
right, or the investor concentration, because if you put 25% down, they don't ask either one of those questions, right? The budget, the reserves doesn't matter, and the renting concentration doesn't matter. They don't ask those questions, right? So if you're trying to put a low down payment on a property like that, you're probably going to want to move on, because even if you do a portfolio loan,
What about if you're willing to put down 30%? Can you do it?
then you could do a conventional, because conventional is not going to ask that question.
They won't ask, as long as you put, but it's 30%, right?
For investment, it's 30%. Yeah. For primary,
And can you
it's 25.
do that
DSCR?
I can never get that out of my mouth.
You could do that on condos, absolutely.
Yeah.
Yeah, for investors. No income, no tax returns, nothing needed.
And you don't need to look at the budget?
Nope.
Wow. Okay.
Not if you put that amount down.
30%.
Yep. For
Unless
investors.
it doesn't work out the numbers, then it would have to be a little bit
It's
more.
25% for primary,
Okay.
and it's 30% for second home and investment.
But if the budget, if it doesn't make enough income, what's the amount you have to put down in order to not worry about whether or not the numbers make
30%.
30? Oh, okay. So there you go.
Yeah.
So what's the best way for us to get a hold of you, Max, if we're looking to buy, refinance, or do one of these crazy non-warrantable loans that we just want? Listen, real estate always ends up being the best investment in the end, no matter what.
Sure. Well, if for any of those reasons,
Yeah.
if somebody wants to get a hold of me, they can call me at 954-729-6933. And that's my personal line. I'm always available via text or phone call.
And if you're looking for a top agent, give me a call at 954-650-0827. And I'm Laura Sanders with RE/MAX Direct. Thank you for listening to us tonight. And I can't wait to see you next week, or I can't wait to let you hear us next week. And real quick, did anybody say chicken to you? Nobody said chicken. Just say chicken to him. Say chicken. All right, everybody, have a good night. Bye.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust.